Hey guys, how you doing? This is Ken. So today I kind of want to go over the income and qualification process to get a home. When you buy a home, obviously, unless you're buying it cash, you're most likely going to get a loan from the bank. So what the banks look at are, obviously they look at a variety of different things, but one of the most important thing is your income. So I kind of want to go over the income and how you're going to be looked at by the bank and what how they calculate your income to qualify for the loan. So I'm going to keep it very simple, and I don't want to take a lot of your time, but it's pretty basic. To me it's basic, but I kind of want to show it to you guys so you understand how the process works in the qualification. So I'm going to use simple numbers in your qualification. So let's say your income is 120,000 a year. This is your household income. If you're married, obviously this is you and your wife's income, and whoever else wants to be on the loan. So your taxes, for example, in this income obviously should be 120,000 if your income is 120. But the way it works is the banks take your total income divided by 12. Your monthly income is based on this number is $10,000, right? So most people have, car payments, credit cards, and, monthly payments, not the overall amount that you owe to your credit card, but let's say you owe $3,000, but your monthly payment is only $200. So that's what they look at, your monthly payment. So let's just say you have $1,000 a month in expenses for car, credit card, if you have student loans, what have you. Let's just say in this scenario, you have $1,000 in debt. This is an important thing to know. DTI, which stands for debt to income. Banks will allow you to have up to 50% of your debt to income. So if you have a DTI of 50% or less, then you qualify. If you're at 50% at 0.1, you do not qualify. So somehow you have to pay off some debt or what have you. But as long as you're below the 50%, you will qualify. And how you calculate that is obviously you have a principal, interest, taxes, and insurance on the mortgage. So that's what the PITI stands for. And basically we're going from $120,000 a year, it's $10,000 a month, your expenses are $1,000, and as long as your PITI, principal, interest, taxes, and insurance, and some cases HOA. So if you are buying a home in a homeowners association, most places in Orange County, they vary, but anywhere from 200 to 300, 400. Some areas right by John Wayne, they're charging $1,000 a month. So you'll have to take that into consideration. The goal is to stay below 50% DTI. So if your PITI is $4,000 plus the $1,000 for your car, your credit card payments, your bank will accept the loan. Obviously, you still have to prove that you have the income. If you're W-2, you need to show proof of taxes, all sorts of things. But we have a lot of different options as far as the loan programs. But what's important is you stay below 50% DTI, and your taxes again have to reflect that you are earning the income you say that you are. If you are self-employed, we need to show 2 years of tax returns. We need to show your bank statements, and these are different programs. Obviously, different programs, the rates are different, but if you want to go conventional, you do need to show taxes or W-2. And obviously the down payment that you're making on the house needs to be seasoned, which means it has to stay in your bank account for 2 months or more. If you, let's say you get a large lump sum payment from your mom, from your dad, what have you, we need to source those funds, and it needs to be on a gift letter. I mean, we can work with you on that. It just needs to be provided to the bank so they they know where the money is coming from. So again, yearly income, monthly income, you just pretty much divide it by 12, take your expenses, 50% DTI will qualify you. And another thing to keep in mind right now, insurance in California is kind of rocky. A lot of companies are not insuring, so you need to know how much you're going to spend on insurance. You could easily go online and do a Google search and get some preliminary numbers. But this is basically how banks will look at your file and approve the loan. We're here to assist you on how to navigate through this process, because there are other ways to also go below this. It depends on your interest rate, obviously. The higher the interest rates, the higher this number is going to be. So there are ways that we could get that credited from the seller if you're buying a home. So give us a call before, obviously, you are purchasing a house. But as far as understanding the concept, this is how it works. I hope this helps you guys. If you have any questions, feel free to call me or text me. I'm always available, and you know where to reach me. Thanks, guys. Bye.